Is Islamic banking just a scam? Think about it. You walk into an Islamic bank. You open a savings account. You get profit on your money. You walk into a conventional bank. You open a savings account. You get interest on your money. Same thing, right? You apply for a car loan at a conventional bank. They charge you interest. You apply for car financing at an Islamic bank. They charge you profit. The monthly payment looks almost the same. The total amount looks almost the same. So what is the difference? Many Muslims ask this question. Maybe you have asked it too. Maybe you have heard people say Islamic banking is fake. Maybe you have heard people call it a marketing trick. Maybe someone told you it is just interest with Arabic names. Murabaha, ijara, musharaka, fancy words. Same thing, right? I understand why people think this way. I really do. When you look at the surface, everything looks similar. The banks look similar. The products look similar. The numbers look similar. Even the advertisements look similar. So what is actually different? This is exactly what we are going to explore today. In this video, I will bust 5 common myths about Islamic banking. These are myths that confuse millions of Muslims. These are myths that stop people from switching to halal options. These are myths that make people think there is no point in trying. By the end of this video, you will know the real differences. Not the marketing talk, not the complicated jargon. The actual practical differences that matter to your money and your akhirah. Myth number 1. Islamic banking is just interest with a different name. We will bust this myth completely. Myth number 2. Islamic banks use the same interest rates as conventional banks. I will explain why this argument misses the point entirely. Myth number 3. There is no real difference in how the banks operate. I will show you what happens behind the scenes that you never see. Myth number 4. Islamic banking is more expensive, so why bother? We will examine if this is actually true. Myth number 5. Islamic banks are just marketing tricks to attract Muslims. I will show you how to tell the difference between genuine and fake. And here is something special for you. If you stay until the end of this video, I will give you a simple 5-question test. You can use this test on any bank in the world. These 5 questions will tell you if a bank is truly Islamic or just pretending. This test is powerful. It will save you from being fooled. It will help you make the right choice for your family. It will give you confidence when dealing with any financial institution, but you have to watch until the end to get it. Deal? Now let me be honest with you about something. I am not here to tell you all Islamic banks are perfect. They are not. Some Islamic banks have problems. Some products are questionable. Some institutions care more about profit than compliance. This is reality. I will not hide it from you. But I am also not here to tell you Islamic banking is fake, because it is not. The differences are real. They matter. They have spiritual significance. And millions of Muslims around the world have benefited from understanding these differences. My job today is to give you the truth, the balanced truth, not the marketing version, not the cynical version, the honest version that helps you make informed decisions. So let us start with the biggest myth of all, the myth that makes people dismiss Islamic banking without even trying. The myth that says it is all just interest with a different name. Is this true? Let us find out. Myth number 1. Islamic banking is just interest with a different name. This is the most common criticism. You have probably heard it many times, maybe from friends, maybe Ram family, maybe from that uncle at the dinner table who thinks he knows everything. They say the bank charges you profit instead of interest, but profit and interest are the same thing. Just different words, different packaging, same product inside. On the surface, this argument makes sense. You borrow money, you pay back more than you borrowed. Whether you call it interest or profit, you still pay extra. So what is the difference? Let me explain why this argument is completely wrong. The difference is not in the word. The difference is in the structure. The difference is in who owns what and who takes the risk. Let me give you a real example. Let us say you want to buy a car. The car costs $30,000. You do not have $30,000, so you need financing. First, let us see how a conventional bank works. You go to the bank. You say, I want to buy this car. The bank says, okay, we will give you a loan. Here is $30,000. Go buy your car. Pay us back over 5 years. Pay us 5% interest every year. What happened here? The bank gave you money. You took that money. You bought the car. The car is yours from day one. The bank never owned the car, not even for 1 second. The bank only gave you money and charged you for using that money. This is interest. This is riba. Money being exchanged for more money. The bank did not buy anything. The bank did not sell anything. The bank did not take any risk on the car. If the car breaks down tomorrow, the bank does not care. You still owe them the money plus interest. Now let us see how an Islamic bank works. You go to the Islamic bank. You say, I want to buy this car. The bank says, okay, we will buy this car for you. The bank goes to the dealer. The bank pays $30,000. The bank now owns the car. The bank's name is on the ownership papers. Then the bank comes to you. The bank says, we own this car now. We will sell it to you for $35,000. Yo, you can pay us over 5 years. What happened here? The bank bought an asset. The bank owned that asset. The bank then sold that asset to you at a profit. This is trade. This is business. This is halal. Can you see the difference? In the conventional system, money is exchanged for money. The bank never touches the car. The bank only deals in cash. In the Islamic system, there is a real transaction. The bank buys something. The bank owns something. The bank sells something. There is actual trade happening. But wait, some people say this is just extra steps. The end result is the same. You still pay more money. What is the point of the bank buying the car first? Great question. Let me answer it. The point is risk and responsibility. When the Islamic bank buys the car, the bank takes a risk. What if the car is defective? What if the car gets damaged before they sell it to you? What if the dealer cheats them? The bank is responsible. The bank owns the car. The bank has to deal with any problems. In those few moments of ownership, the bank carries real responsibility. This is not just paperwork. This is actual ownership with actual risk. There is another difference too. What if you change your mind? What if, after the bank buys the car, you say, sorry, I do not want it anymore? In conventional banking, this cannot happen. You already took the loan. The money is in your account. You owe them regardless. In Islamic banking, if you refuse to buy after the bank purchased the car, the bank is stuck with a car they did not want. They have to sell it to someone else, maybe at a loss. This is real risk. Now, in practice, Islamic banks protect themselves from this risk. They make you sign a promise to purchase before they buy. This is normal and acceptable. But the principle remains. The bank must own before it can sell. The bank must take risk before it can make profit. This is the fund, a mental difference between profit and interest. Interest is money charged for lending money, no trade, no ownership, no risk on any asset. Profit is money earned from buying and selling, real trade, real ownership, real risk. Allah has permitted trade and forbidden interest. This is in the Quran. Surah Al-Baqarah, verse 275. Trade is halal. Interest is haram. They are not the same thing. So when someone tells you Islamic banking is just interest with a different name, you can explain the difference. The name is not what matters. What matters is ownership. What matters is risk. What matters is real trade versus fake trade. The first myth is busted. But what about the second myth? People say Islamic banks use the same interest rates as conventional banks. If they use the same rates, how can they be different? Let us bust this myth next. Myth number 2. Islamic banks use the same interest rates as conventional banks, so they must be the same thing. This is a very popular argument, and I will be honest. On the surface, it looks like a strong argument. Here is what people say. When you get financing from an Islamic bank, they calculate the profit rate. How do they calculate it? They look at something called LIBOR or KIBOR or SIBOR. These are benchmark interest rates. These are the rates conventional banks use. So if Islamic banks use the same rates, how can the product be different? If the number comes from the interest rate, the product must be interest. Right? Wrong. Let me explain why. First, we need to understand what a benchmark is. A benchmark is just a reference point. It is a number used for comparison. It tells you what is happening in the market. It tells you what money is worth at this moment in time. Think of it like this. A thermometer tells you the temperature, but the thermometer does not create the heat. It only measures what already exists. Similarly, LIBOR tells you what interest rates are in the market. But using that number as a reference does not mean you are dealing G in interest. Let me give you a very simple example. Imagine 2 meat shops in your neighborhood. One sells halal meat, one sells haram meat. Both shops sell chicken. The halal chicken costs $5 per kilo. The haram chicken also costs $5 per kilo. Same price. Does that make them the same thing? Of course not. The price is just a number. What matters is the product. What matters is how the chicken was slaughtered. What matters is whether the Islamic requirements were followed. If someone says your halal chicken cannot be halal because it costs the same as haram chicken, you would laugh at them. The price has nothing to do with whether it is halal or haram. The same logic applies to banking. The profit rate in Islamic banking might match the interest rate in conventional banking. They might use the same benchmark to calculate. But what matters is not the number. What matters is the transaction behind that number. In conventional banking, the transaction is lending money for interest, money for money, nothing else involved. In Islamic banking, the transaction is buying and selling an asset, real ownership, real trade, real risk. The benchmark is just used to determine a fair profit margin. It tells the bank what profit percentage is reasonable in today's market. This is called pricing, and pricing is not haram. Let me explain further. When you sell your house, how do you decide the price? You look at what similar houses sold for. You look at market rates. You use other prices as a benchmark. Does this make your house sale haram? Of course not. You are doing real trade. You own the house. You sell the house. You just used market data to price it fairly. Islamic banks do the same thing. They buy an asset. They sell that asset to you. They need to decide how much profit to charge. They look at what is fair in the market. They use benchmark rates as a rents. The benchmark is not the transaction. The benchmark is just the pricing tool. Now let me address something important. Some people say Islamic banks should create their own benchmarks. They should not rely on interest-based rates at all. This is a valid opinion. Some scholars agree with this view. In fact, there are efforts to create Islamic benchmarks. Some countries are developing alternative pricing systems. This is good progress. It will make Islamic banking even more distinct. But until those alternatives become widespread, using conventional benchmarks for pricing is accepted by most scholars. The reason is simple. The benchmark is not the contract. The benchmark is just a number. What makes something halal or haram is the actual transaction. Think about it this way. A hospital treats patients. The hospital charges fees. How does the hospital decide the fees? They look at what other hospitals charge. They look at market rates. What if all other hospitals in the city are owned by criminals? Does that make this hospital criminal too? Of course not. The hospital is using market data for pricing, but the hospital's actual service is legitimate. Same with Islamic banks. They operate in a financial system dominated by interest. They use market data to stay competitive. But their actual transactions follow Islamic principles. The second myth is busted. Using the same benchmark does not mean the product is the same. The benchmark is just pricing. The product is what matters. The structure is what matters. The contract is what matters. But now, another question arises. If the structures are different, why does banking feel exactly the same? When you walk into an Islamic bank, everything looks similar. The forms look similar. The process looks similar. Is there any real difference in practice? This is myth number 3. Let us bust it. Myth number 3. There is no real difference in practice. Islamic banks look exactly like conventional banks. They operate exactly like conventional banks. The only difference is the signboard outside. I understand why people think this. When you visit an Islamic bank, what do you see? A building, a counter, bank employees, forms to fill, a queue to wait in. It looks exactly like any other bank. You open an account, you get a debit card. You use an ATM. You check your balance online. You transfer money. Everything feels the same. So where is the difference? The difference is behind the scenes. The difference is in what you do not see. The difference is in the structure, the governance, and the rules that control everything. Let me show you 4 major differences that exist in practice. Difference number 1. The Sharia Board. Every Islamic bank has something called a Sharia Board. This is a committee of Islamic scholars. These are qualified experts in Islamic jurisprudence and finance. Their job is to review every product the bank offers. Before any product goes to market, the Sharia Board must approve it. They examine the contracts. They check the structure. They verify that everything follows Islamic law. If something is wrong, they reject it. This is not optional. This is mandatory. Every Islamic bank must have this board. No conventional bank has anything like this. Think about that. A group of religious scholars sits inside the bank. They have authority over products. They can say no. They can demand changes. They can shut down anything that violates Islamic principles. Does your conventional bank have scholars checking if products are ethical? Does your conventional bank have religious experts reviewing contracts? Of course not. This is a real practical difference. This is a fundamental rule. No asset, no transaction. Why does this matter? Because it prevents the kind of speculation that caused the 2008 financial crisis. Conventional banks were trading complex financial products that had no real assets behind them, just paper trading more paper. When it collapsed, millions of people lost their homes. Islamic banks cannot do this. Every product must have a real asset. This keeps the banking system grounded in reality. Difference number 3. Prohibited businesses. Conventional banks will lend money to anyone who can pay it back. They do not care what business you run. They do not care if your business is ethical. They only care about profit. Islamic banks have a list of prohibited businesses. They cannot finance certain industries, no matter how profitable. What is on this list? Alcohol. Islamic banks cannot finance breweries or liquor stores. Gambling. Islamic banks cannot finance casinos or betting companies. Tobacco. Many Islamic banks refuse to finance cigarette manufacturers. Weapons. Islamic banks avoid financing arms dealers. Adult entertainment, obviously prohibited. Conventional interest-based businesses. Islamic banks cannot finance other interest-based lenders. This is a real restriction. Islamic banks turn away profitable customers because of these rules. They lose money because of these rules, but they follow them anyway. Can you imagine a conventional bank saying no to a profitable client because of ethics? It rarely happens, but Islamic banks do it every day. Difference number 4, how your savings account works. This is a difference you experience directly. When you put money in a savings account, what happens to it? In a conventional bank, you deposit money. The bank guarantees you a fixed interest rate. Let us say 2% per year. No matter what happens, you get your 2%. If the bank has a great year, you get 2%. If the bank has a terrible year, you still get 2%. Your return is fixed and guaranteed. It has no connection to what the bank actually does with your money. In an Islamic bank, your savings account works differently. It is based on a concept called mudaraba. This means profit sharing. You deposit money. The bank invests that money in halal businesses. At the end of the period, the bank calculates actual profit. Then, the bank shares that profit with you according to an agreed ratio. If the bank made good profit, you get good returns. If the bank made less profit, you get less returns. Your return is connected to real performance. This is a fundamental difference. In conventional banking, you get guaranteed interest regardless of reality. In Islamic banking, you share in actual results. Now, some people say, this is worse. Why would I want uncertain returns when I can get guaranteed returns? Fair question. But think about it from an Islamic perspective. Guaranteed returns with no risk is exactly what makes interest haram. You do nothing, you take no risk, but you still get paid. This is unfair. This is what Islam prohibits. In mudaraba, there is real partnership. The bank works. You provide capital. Both of you share results. This is fair. This is halal. So when someone tells you there is no practical difference between Islamic and conventional banks, you can explain these 4 things. Sharia board oversight, asset-backed transactions, prohibited business lists, profit-sharing savings accounts. These are real differences. They happen every day. They affect how the bank operates. They affect your money. The third myth is busted. But here comes another objection. People say, okay, maybe there are differences, but Islamic banking costs more. Why should I pay extra for the same result? Is Islamic banking really more expensive? Let us examine this myth next. Myth number 4. Islamic banking is more expensive. You pay more for the same thing. So why bother? This is a practical concern. Money matters. Budgets are tight. Every dollar counts. If Islamic banking costs more, many people will choose the cheaper option. I understand this completely. So let us examine this myth honestly. Is Islamic banking actually more expensive? The honest answer is sometimes yes, sometimes no. It depends on the product. It depends on the bank. It depends on where you live. Let me explain why Islamic products sometimes cost more. Reason number 1. Compliance costs. Islamic banks have extra expenses that conventional banks do not have. They must pay for a Sharia board. They must hire scholars. They must conduct regular Sharia audits. They must train staff in Islamic finance principles. They must develop special documentation for every product. All of this costs money, and that cost gets passed to customers. Reason number 2. Complex transaction structures. Remember the car financing example? In conventional banking, the bank just gives you money. One simple transaction. Done. In Islamic banking, the bank must buy the car first, then transfer ownership, then sell it to you. Multiple steps, multiple documents, multiple legal requirements. This complexity costs money. Lawyers must draft special contracts. More paperwork means more processing time. More steps mean more administrative work. Reason number 3, smaller market scale. Conventional banking has existed for centuries. It dominates the world. Millions of transactions happen every second. The systems are optimized. The costs are spread across a huge customer base. Islamic banking is smaller. It serves a fraction of the global market. Fewer customers means costs are spread across fewer people. This makes each transaction relatively more expensive. These are real factors. They explain why Islamic products sometimes cost more. But here is the good news. This is changing. Islamic banking is growing rapidly. More customers are joining every year. More banks are entering the market. Competition is increasing. What happens when competition increases? Prices go down. 10 years ago, Islamic home financing was significantly more expensive than conventional mortgages. Today, in many markets, the difference is much smaller. In some cases, Islamic products are actually competitive with conventional ones. In countries like Malaysia and the Gulf states, Islamic banking has massive market share. The competition is fierce. The prices are very competitive. Sometimes Islamic products are even cheaper. In Western countries, Islamic banking is still growing. The prices are still higher in some cases. But as more Muslims choose Islamic options, the costs will come down. So the myth that Islamic banking is always more expensive is not entirely true. It depends on where you are and what product you need. But let me ask you a different question. Even if Islamic banking costs a little more, is it worth it? Let me give you something to think about. Imagine 2 scenarios. Scenario 1. You take a conventional mortgage. You save $5,000 over 30 years compared to Islamic financing, but you earn that saving through interest, through riba, through something Allah has forbidden. Scenario 2. You take Islamic financing. You pay $5,000 more over 30 years, but your home is purchased through halal means. Your money is clean. Your conscience is clear. Which scenario is actually more expensive? If you only count dollars, scenario 1 looks better. But we are Muslims. We do not only count dollars, we count our deeds. We count our akhirah. We count the barakah in our wealth. What is $5,000 compared to peace of mind? What is 5,000 yen? Dollars compared to knowing your family lives in a halal home? What is $5,000 compared to standing before Allah with clean earnings? I am not saying money does not matter. It does. We have families to feed, bills to pay, futures to plan for. But I am saying we should see the full picture. The financial cost is only one part. The spiritual cost is also real. The spiritual benefit is also real. A scholar once said something beautiful. He said the most expensive thing you can buy is something haram at a cheap price. And the best bargain you can find is something halal even at a higher price. Think about that. Also consider this. Many Muslims spend extra money on halal food. They pay more for zabiha meat. They avoid cheaper options because they care about what enters their body. But what about what enters your wealth? Is your money not also important? Should your financial life not also be halal? If you pay extra for halal chicken, why not pay extra for halal financing? Both are about following Allah's commands. Both are about living a complete Islamic life. The 4th myth is busted. Yes, Islamic banking sometimes costs more, but the gap is shrinking, and even when it costs more, the spiritual value may be worth it. Only you can make that decision for your family. Now let us address the final myth, the big one, the one that makes people completely dismiss Islamic banking. People say it is all fake, just marketing tricks, a way to attract Muslim customers without offering anything real. Is Islamic banking just a scam? Let us find out. Myth number 5. Islamic banks are just marketing tricks. They put Arabic names on regular products. They use Islamic branding to attract Muslim customers. But underneath, it is all the same. Just clever marketing. This is the harshest criticism. And I want to be honest with you. This criticism is not completely baseless. There have been cases of fake Islamic products. Some institutions have misused Islamic terminology. Some have offered products that were Islamic in name, only. This has happened. I will not deny it. But does this mean all Islamic banking is fake? Absolutely not. Let me explain why. First, let us talk about regulation. In many countries, Islamic banking is heavily regulated. Banks cannot just call themselves Islamic. They must meet specific requirements. They must follow specific rules. Government authorities verify compliance. In Malaysia, the central bank has strict guidelines for Islamic banking. Banks must prove their products are Sharia compliant. Regular inspections happen. Violations result in penalties. In the Gulf countries, similar regulations exist. Bahrain has the Accounting and Auditing Organization for Islamic Financial Institutions. This body sets standards for the entire industry. Banks must follow these standards. In Pakistan, the state bank has a dedicated Islamic banking department. They issue specific regulations. They conduct separate audits for Islamic banks. Even in Western countries, Islamic financial institutions must meet certain criteria. They face legal scrutiny. They cannot simply claim to be Islamic without backing it up. This is very different from marketing tricks. Marketing is just words. Regulation is legal requirement with consequences. Second, let us talk about legal structure. Islamic banking products have different legal contracts. These contracts are recognized by courts. They have been tested in legal disputes. When problems arise, courts examine the actual contracts. They look at the structure. They determine if the transaction was genuine or fake. There have been court cases where judges examined Islamic financing agreements. The courts looked at whether real ownership transfer happened. They checked if the bank actually purchased assets before selling. These legal reviews confirm that the structures are real, not just marketing. If Islamic banking was just marketing, courts would see through it immediately. Contracts would be exposed as regular loans with different names. But that is not what happens. Courts recognize the structural differences. Third, let us talk about the Sharia board again. I mentioned this earlier, but it deserves more attention. A Sharia board is not just decoration. These scholars put their names and reputations on the line. When a scholar approves a product, they are personally accountable, Islamically accountable. These scholars know they will answer to Allah for their rulings. They take this seriously, very seriously. Many prominent scholars serve on these boards. Scholars with decades of learning, scholars with international reputations. Would they risk their entire reputation for a marketing trick? Would they lie about halal and haram for a paycheck? Some might, but most would not. The scholars I have studied with take this responsibility very seriously. They argue, they debate, they reject products, they demand changes, they do their job. Is the system perfect? No. Are there weak scholars who approve questionable products? Possibly, but the system as a whole has integrity. Fourth, let us talk about what Islamic banks cannot do. If Islamic banking was just marketing, banks would finance anything profitable. They would just use Islamic labels and collect money from Muslims. But Islamic banks actually turn away business. They refuse to finance alcohol companies even if those companies offer great returns. They say no to gambling operations even when profits are guaranteed. They reject tobacco and weapons and adult entertainment. This is not smart marketing. This is leaving money on the table. real money, significant profits. Why would a bank refuse profitable customers if it was all just a trick? It makes no business sense unless they actually believe in the principles, unless they actually follow the rules. Now let me acknowledge something important. Not all Islamic banks are equal. Some are better than others. Some take compliance very seriously. Some are more relaxed. Some have strong Sharia boards. Some have weak oversight. This is true in every industry. Some halal restaurants are very strict. Some are careless. Some halal certifiers are rigorous. Some are not. The existence of weak players does not make the entire industry fake. It means you need to be careful. It means you need to do your research. It means you need to ask questions. Which brings me to an important point. How do you know if an Islamic bank is genuine? How do you tell the difference between real compliance and marketing tricks? This is exactly what I promised you at the beginning of this video. The 5-question test to verify any bank. We are almost there. But first, let me summarize what we have learned. Islamic banking is not just marketing because of several reasons. Regulatory requirements force compliance. Legal structures are recognized by courts. Sharia boards provide scholarly oversight. And Islamic banks actually refuse profitable haram business. Are there problems in the industry? Yes. Are there questionable products? Yes. Should you be careful? Absolutely. But dismissing all Islamic banking as fake is not fair, it is not accurate, and it prevents Muslims from accessing halal financial options. The 5th myth is busted. Now let me give you what I promised, the simple test to check if any bank is truly Islamic. You made it this far. Thank you for staying with me. Now let me give you what I promised. The 5-question test. These are 5 simple questions you can ask any bank in the world. The answers will tell you if the bank is genuinely Islamic or just pretending. Write these down, save this video, share it with your family. These questions will protect you from fake Islamic products. Let us begin. Question number 1. Do you have a Sharia board? Who are the scholars? This is the first question to ask. Every genuine Islamic bank has a Sharia board. If they do not have one, walk away immediately. But do not stop there. Ask for names. Who are the scholars on this board? What are their qualifications? Where did they study? What is their reputation? A genuine bank will proudly share this information. They will have the names on their website. They will have the scholar's credentials listed. They may even have photos and biographies. If the bank hesitates to answer this question, that is a red flag. If they give vague answers, that is a red flag. If they say they have a board but cannot name anyone, that is a major red flag. Green flag. The bank names specific scholars. The scholars have recognized qualifications. The scholars have good reputations in the Islamic finance community. Question number 2. Do you actually own the asset before selling it to me? This question applies to financing products, car financing, home financing, equipment financing, any product where you are buying something through the bank. Ask them directly. When I apply for car financing, do you buy the car first? Is the car in your name before it becomes mine? Do you take ownership even for a short time? A genuine Islamic bank will say yes. They will explain their process. They will show you how ownership transfers from dealer to bank to you. If the bank says they just give you money to buy the car yourself, that is not Islamic financing. That is a loan with a different name. Green flag. The bank clearly explains the ownership transfer process. They can show you documentation proving they own the asset. They take the transaction seriously. Red flag. The bank is vague about ownership. They cannot explain when they own the asset. The process sounds exactly like a conventional loan. Question number 3. What happens if I default? Is there a penalty? This is a tricky area. It reveals a lot about the bank's true nature. In conventional banking, if you miss payments, you pay penalty interest. The bank charges you more for being late. This is clearly riba. In genuine Islamic banking, penalty structures are different. Some banks charge a late fee but donate it to charity. The bank does not profit from your difficulty. Other banks have no financial penalty at all. They may report to credit agencies but not charge extra. Ask the bank directly. If I miss a payment, what happens? Do you charge me extra? Where does that money go? Green flag. The bank says late fees go to charity, or the bank has no financial penalty for late payment. The bank does not profit from your hardship. Red flag. The bank charges penalties and keeps the money. The late fee sounds exactly like penalty interest. The bank profits when you struggle. Question number 4. What businesses do you refuse to finance? A genuine Islamic bank has a clear list of prohibited businesses. Ask them for this list. They should be able to answer immediately. Do you finance alcohol companies? Do you finance casinos? Do you finance tobacco? Do you finance weapons manufacturers? Do you finance conventional banks? A genuine Islamic bank will say no to all of these, clearly, without hesitation. If the bank hesitates, that is a red flag. If they say they evaluate case by case, that is suspicious. If they cannot give you a clear prohibited list, be careful. Green flag. The bank has a written policy on prohibited businesses. They can name specific industries they refuse. They take this seriously and train their staff on it. Red flag. The bank is vague about what they will or will not finance. They seem willing to finance anything profitable. They do not have clear ethical guidelines. Question number 5. How is profit calculated on my savings account? This question is about your DPOs, SITs. When you put money in a savings account, how do you get returns? In a conventional bank, you get fixed interest. No matter what, your return sounds exactly like interest. The bank cannot explain how your money is actually used. Those are the 5 questions. Let me summarize them for you. 1. Do you have a Sharia board and who are the scholars? 2. Do you own the asset before selling it to me? 3. What happens if I default and where do penalties go? 4. What businesses do you refuse to finance? 5. How is profit calculated on my savings? Ask these questions at any bank. Listen carefully to the answers. Watch for red flags. Look for green flags. Make informed decisions. If a bank answers all 5 questions satisfactorily, you can have confidence in them. They are likely genuine. If a bank struggles with these questions, be careful. Do more research. Maybe look for another option. Knowledge is power. Now you have the knowledge to protect yourself and your family. Now let us wrap up everything we have learned today. We started this video with a simple question. Is Islamic banking just a scam? Is it just conventional banking with Arabic names? After busting 5 myths, I hope you have a clearer answer. Myth number 1 said Islamic banking is just interest with a different name. We busted this myth. The difference is not in the word. The difference is in ownership and risk. Islamic banks buy assets. They own assets. They sell assets. This is trade. Conventional banks just lend money. That is interest. Myth number 2 said Islamic banks use the same interest rates, so they must be the same. We busted this myth. Using a benchmark for pricing is not the same as dealing in interest. What matters is the transaction, not the number. Halal meat can cost the same as haram meat. The price does not determine what is halal. Myth number 3 said there is no real difference in practice. We busted this myth. Islamic banks have Sharia boards. They require asset-backed transactions. Tishkishti. A. Refuse to finance haram industries. They share actual profits with depositors. These are real practical differences. Myth number 4 said Islamic banking is more expensive. We examined this myth honestly. Sometimes it costs more, but the gap is shrinking, and the spiritual value of halal earnings is worth considering. What is more expensive? Paying a little extra for halal or earning through haram and losing barakah? Myth number 5 said Islamic banks are just marketing tricks. We busted this myth. Regulation forces compliance. Legal structures are recognized by courts. Sharia boards provide real oversight. Islamic banks refuse profitable haram business. This is not just marketing. Now you have the 5-question test. You can verify any bank yourself. You do not need to trust blindly. You do not need to dismiss blindly. You can ask questions. You can get answers. You can make informed decisions. But let me leave you with something deeper. The real difference between Islamic and conventional banking is not just rules. It is philosophy. It is worldview. It is how we see money itself. Conventional banking sees money as a product. Money can be bought and sold. Money can grow by itself. You lend money. You get back more money. Money makes money. Islamic banking sees money as a tool. Money itself cannot grow. Money must be connected to real work, real trade, real value creation. You want profit? Create something, sell something, build something, take a risk on something. This is a fundamental difference in how we view the world. In the conventional worldview, the rich get richer just by being rich. They lend their money, they collect interest, they do nothing else. Their wealth grows automatically. In the Islamic worldview, wealth must be earned. You want to grow your money? Invest in real business, take real risk, create real value, share in real outcomes. This is why Allah permitted trade and forbade interest. Trade creates value. Interest extracts value. Trade builds societies. Interest concentrates wealth. Trade rewards effort. Interest rewards laziness. Islamic banking is an attempt to build a financial system on these principles. Is it perfect? No. Are there problems? Yes. Are there weak institutions? Certainly. But the effort is real. The principles are sound. The alternative exists. You have a choice. You can dismiss all of this and continue with conventional banking. That is your choice. I am not here to force anyone. Or you can explore Islamic options. Ask questions. Do research. Find genuine institutions. Make the switch where you can. Do your best with what is available. Allah does not burden a soul beyond its capacity. He knows your situation. He knows your limitations. He only asks you to try. If you try and make mistakes, Allah is forgiving. If you do not try at all, that is a different matter. My advice is simple. Do not be cynical. Do not dismiss without understanding. But also, do not be naive. Do not accept without questioning. Be an informed Muslim, a thinking Muslim, a Muslim who asks questions and seeks answers. Now I have a request for you. If this video helped you understand Islamic banking better, please subscribe to this channel. I create videos like this every week. Videos that explain Islamic concepts in simple language. Videos that help you live a more Islamic life in the modern world. Hit the subscribe button. Turn on the notification bell. Join our growing community of Muslims who want to learn and grow together. I also want to hear from you. What is your biggest question about Islamic finance? What topic should I cover next? What confuses you the most? Leave a comment below. I read every comment. Your questions help me create better content for you. And one more request. Think of someone in your life who thinks Islamic banking is fake. A friend, a family member, a colleague, someone who dismisses it without understanding. Share this video with them. Send them the link. Let them watch and decide for themselves. Maybe this video will change their perspective. Maybe it will start a conversation. Maybe it will help them see things differently. Knowledge should be shared. Islam spread through sharing. Let us continue that tradition. Finally, I want to thank you for watching until the end. You stayed for the entire video. You learned. You thought. You engaged. This tells me you care about living a halal life. You care about doing things right. You care about your deen. May Allah bless you for this intention. May He make it easy for you to find halal options. May He put barakah in your wealth. May He accept your efforts even when you fall short. The journey to a fully halal financial life is not easy. The system is stacked against us. But Allah sees your struggle. He knows your heart. He rewards the effort even when results are imperfect. Keep learning. Keep trying. Keep asking questions. Until next time, Assalamu alaikum wa rahmatullahi wa barakatuh.